All right, good afternoon, everybody. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer, and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I think this is my position disclosure. I can't even be 100% sure. Very, very, very frustrating day for me. I have no idea what the market did. I don't even know what I'm going to talk about in today's afternoon meeting. I spent my entire day trying to figure out what my positions were. And then at the end of the day today, when I was trying to wrap things up and update my spreadsheets, I still had almost every position I saw. It seemed like my sizing was off. And then I only realized in the close that I was still short 200 shares of NBIS and short 200 shares of VKTX, which were positions that I was swinging long. So just kind of a nightmare. I'll never even be able to figure out how much money this cost me. But it is what it is. I've been on Lightspeed for 15 years. This has never happened before ever. I have no idea how it happened. To answer your question, sure, I have absolutely no idea. 15 years, trading on Lightspeed. I've never had an issue like this before ever. So I just gotta kind of shrug it off, and it just is what it is, and it just was an extremely frustrating waste of a day. I actually finished up a lot of money, but I don't know how much because I don't think that my software is giving me a correct P&L. But 15 years of trading on Lightspeed, one time ever of something really frustrating and bad happening. Every once in a while we get a couple small things like a start of the day shortlist file doesn't get posted right away and then they fix it. But 15 years on Lightspeed with only one major issue ever, and that being today. It just kind of is what it is. Just gotta move on, and just is what it is. Overall, it's been a phenomenal trading software. I've always found that Sterling gives phenomenal service to T3 and to traders generally. So I really have no complaints. Just one day ever of trying to spend the entire day figuring out what my positions are, and definitely cost me some thousands of dollars today. I'll never be able to figure out what it is. Not to mention opportunity cost of not being able to properly focus on the market and look for new opportunities and work with the team properly. But like I said, it's just part of the business sometimes. It doesn't matter what trading software you're on. If you're on it long enough, there will be a mishap. Doesn't matter what the broker is, doesn't matter what the trading software is. I have seen it happen with every single software that T3 offers. I've seen it happen with every single retail brokerage that ever exists. So it just is what it is. Gotta kind of just roll with the punches, as they say. And tomorrow will be a new day, and tomorrow morning I'll really be able to kind of figure out exactly what my positions are and my P&L and all that stuff. So let's try to do an end of the day wrap. I will review the market with you guys, and I'll try to figure out what happened today. So we did finish positive. We finished off highs. SPYs are up 0.65%. Qs are up 1.3%. It's a big day for the Qs. And the IWM is barely up at all. It's only up 0.12%. So let's take a look at what today's trading did to the big picture market technicals. So we had a pretty big intraday rollover. The question is, what sort of doji does that leave us, right? A lot of the times when I'm trading, I'm thinking about as the day is forming, as like a 5-minute chart or as a 15-minute chart is forming, like if the day were to end right now, what does that actually do to the daily chart? What kind of candle does that give us? What does that mean for our bigger picture technicals? And obviously that updates throughout the trading session and finalizes at the close of day, where we can see where the market actually closes and how the daily candle actually forms. But obviously when you see this sort of a rollover, it means that there is going to be some sort of upside tail on our daily chart, where that tail extends up to 599.70 or whatever, the high of the day, and down to our closing print, which is around 595.40. And there'll be a little bit of a downside tail as well, because we had a pretty strong last 10 minutes of the day. of maybe like $1.75 or so downside tail. So let's take a look at the daily chart, and boom, that's exactly what we have. We have a doji up into this $600 area, a little bit of a downside tail as well. But at the end of the day here, it's kind of what I expected from the market, but it's not, the way we got there is not how I expected it would happen. If everyone remembers in the morning meeting today, my expectation, what I said in the meeting was you're probably better off shorting this gap up than buying this gap up. And that's for a couple reasons. One is that it's a gap up, right? It's technically a large common gap to the upside. A large common gap to the upside is not a gap that you want to chase. It's a gap that technically you want to fade. Obviously, you want to try to figure out the exact supply and demand dynamics behind that gap. But generally speaking, a large common gap to the upside, that's a gap that's within a range, is something that has a higher probability of filling than giving continuation. So generally, it's going to be something that you want to fade. Then you want to combine that gap analysis on that small time frame with the big picture to try to figure out, well, if that gap then fades, does that fade into like a full-on failure, or does that give a little bit of an early day fade just because of the degree of upside extension that then pivots up and then you're breaking new highs and you're getting great continuation? And where the big picture technicals are, in my opinion, very neutral right now. We clearly broke our uptrend on this daily chart, on like a smaller intermediate picture on the daily chart, but we have not rolled into a downtrend on the daily chart. We nearly did at one point last week, at the low last week, when we were testing the December 20th low. If we could have gotten a close last week below the December 20th low, we would have gone into a pattern of lower highs and lower lows. From that pattern of higher highs and higher lows, that would have indicated a full reversal. That would make these technicals significantly more bearish, but that's not what happened. We held with equal lows, so it kind of continues to be more of like a challenge type of trend, more of a neutral market. You cannot say that this market, big picture, you can say this market's bullish. Real big picture. You got a rising 200-day, you have an uptrend that very big picture is still broadly intact, even though it's struggling a little bit here on that small picture. The very big picture of it, it's still intact. This is just a bigger picture. Next higher low in the market that will eventually work its way up. That's what the big picture tells us. But that smaller intermediate time frame is not giving us the same thing. And to trade with conviction, we want to have continuity amongst time frames. We don't have that. We have a really big picture that I would say is still bullish, which we just briefly analyzed, and a smaller and more intermediate time frame here on the daily chart that has become neutral. And that started, again, with the December 18th Fed day, where we had a day to take notice of, a negative Maribozu engulfing candle that led to some the next day plus that morning after of downside follow through. This was a great short-term buying opportunity, and $16 of downside extension from the ADMA on a day 3 gap down. It was a great short-term buying opportunity. The bounce back overshot my expectations, but did not negate the bearishness of the bearish engulfing candle. So we're still in the penalty box, if you will. We're still small time frame bearish. And then when we got that lower high and this equal low, that kind of also made our more intermediate time frame neutral. So you could say at this point, as we're trying to do an analysis here, big picture is bullish, small picture is neutral to bearish, and intermediate picture is also pretty neutral. So given that context, now we want to circle back. Right, this is what a lot of how my morning research is done every day, by the way. Given that context, I then want to go in as I'm assessing the gap up this morning and try to assess, well, what is the probability of different scenarios occurring as we're gapping up this morning? So first of all, it is a common gap to the upside. So forget about all the big picture daily technicals I was just talking about and the time frames and the trends. A large common gap to the upside typically gets faded to some degree no matter what. So okay, that's what I'm thinking is a higher probability off the open scenario. And then the question is now, based on the bigger picture stuff that we just analyzed, is there then a higher probability of this being like a legitimate pivot high failure off this $600 that leads to us selling all the way down? Or is this a higher probability of just like, okay, we have to spend our time in the morning satisfying that upside extension that comes from the gap, and then we could potentially break highs and even give continuation? And given what I just described of different time frames of trend giving us a different picture, I didn't have real conviction on it being a full failure versus it being a opening correction. If it bageled ahead, as Josh likes to say, I probably would pick like a full-on failure and would certainly rather be pushing the short a little bit more than trying to come in and buy dips. But overall, it's hard to have a lot of conviction when you have mixed messages on different time frames. That's kind of the thought process and the setup coming into the day, and I'm building my game plans and my thought processes around that on a day-to-day basis. So what ended up actually happening, as I was just kind of describing, at the end of the day, I got the result I was looking for. I got this upside tail into $600. It satisfied the upside extension that we had from the gap up this morning, and we closed on the weaker side of things. So the market is still certainly not looking bullish to me on the big picture, but we did not get there in the way that I expected it to. The market in the first half of the day was very, very strong. We pretty much immediately accelerated, taking the upside extension from the gap. And this is, of all the things that can happen in an up move on a gap, I would say that this is probably the lowest probability, which is a large common gap to the upside that's immediately giving continuation. Sometimes you'll see it for maybe 15 minutes, 15, 20 minutes, but then you get like that upside tail, and then you get a break of the opening low, and you get like a bigger correction off the fact that you got bigger extension. This situation that occurred here off the opening price action is a very low probability situation based on my understanding of technicals. And that's why you want to keep in mind lower probability situations happen. If you trade long enough, anything that can happen in the market will happen. That's a truism that I've really learned over the course of the years. So lower probability situation is what took place. We gapped up, we were extended, and we continued. And then when you thought we were going to maybe correct through time and let this ADMA catch up, we continued even more. And then it really wasn't until like 10:35 that the market here for the SPYs touched the ADMA on the 5-minute chart for the first time. That indicates an extremely strong market. Usually by that 10:15, 10:30 period, I'm analyzing, the extension on the 5-minute has long been satisfied. Usually the extension on the 5-minute is satisfied by 10 a.m., a little bit after 10 at the latest. And then by 10:30, I'm looking at the extension on the 15-minute chart, and I'm saying, wow, we could use a 15-minute correction. Instead, by 10:35, we only got our first touch of the ADMA on the 5. That's a really rare situation, especially within the confines of the bigger picture technicals that we were just discussing. And we were able to bounce off that ADMA and give broader continuation until we got a full-on rounded top reversal intraday today. So that rounded top reversal intraday eventually broke the opening low, eventually was working towards a gap fill that never quite got there, got much closer for the IWM than the SPYs, maybe even fully did it with the IWM. We'd have to look because, again, I was a little distracted today. And then we got that small bounce in the close. So at the end of the day here, when you're looking at these daily chart technicals, you have this upside tail on this daily candle, which indicates that sellers are still very present in this market. This market is not a bull market. It's not a bull market until we can get back above the 602.50 to 605 area to give us more confidence that the bull market is back on. If anything, today's sell-off, even though I would say it got there in a little bit of unusual way, still indicates a degree of bearishness to this market. And we'll see, is this another little bit of a lower high coming in on this daily chart now into 600? Last pivot high was about 602.50. High of the negative Maribozu was 606.40. That enables us to eventually retest again the 580 support zone to see if we actually break down or not. We shall see. So going forward, what are our important levels for the SPY? 580.50 602.50 or whatever this low is still really important. Now today's high will be important for going forward. If today's high gets broken this week, it indicates a more of a healing process for this market, a market that's becoming more bullish. And then really, if you begin to clear this like 602.50 to 605 area, then you're just back to being outright bullish across the board on every time frame for the market. We'll see if that happens. From a market dynamic perspective, I was able to talk about that a little bit in the morning meeting today. The market dynamics, I think, are also very mixed right now. So we have a mixed picture insofar as our daily chart technicals when you're doing multiple time frame analysis, and you have a mixed picture as well when you're thinking about some of the market dynamic information that we like to pay attention to. There is a strong buy impulse of new money coming into the market in the first 2 weeks of January. That's, you know, what your January effect stems from. That is based off the fact that 2024 was a really strong year. It forces a lot of new money to come in the beginning of that following calendar year in the first 2 weeks. Yet we are in an environment where the higher realized volatility that we've gotten now over the course of the last couple weeks, and to some degree today, 0.65% up close in the SPYs, 1.25% in the Qs, still has our volatility systematic funds. I would assume, though I haven't actually seen an update, someone I think sent me an update today, but I haven't been able to look at it yet, still as selling in this market. So we got the systematic selling, but there's also forced buy flow that's coming in. We are in the corporate buyback blackout window because earnings season is going to be starting soon for the January earnings season. And that's where we are. I think that this market right now is a very mixed message market, and that makes having conviction at the index level or having conviction on things that are very correlated to the indexes as a little bit more difficult right now. Luckily for us, there's been a lot of stocks that have been in play that we've been able to focus on where the correlation to the indexes is much lower, and that's created a boatload of opportunity for us as traders. So it's kind of a full analysis of the SPYs, and you know, just doing things a little bit differently for today's afternoon meeting because, again, I didn't participate today as much as I would like to, or study the market as much as I would like to. But maybe that gives everyone an idea kind of how I develop my thought process a little bit for when I'm going into our morning meeting at 9 a.m. and how I'm coming up with the game plans and the strategies that I'm actually planning on implementing for that day's trading session. The Qs here are pretty much the exact same story as the SPYs, except a little bit more relatively strong on a percentage basis, but it's still an upside tail today. Let's look at the 5 minute. An upside tail today, a little bit of a downside tail from the into the close rally. That upside tail, if it holds a little bit of like a downtrend line pattern that you could be drawing if you play the connect the dot game from high and the negative Maribozu high and the December 26th high and then today's high. And we still are in this like challenged trend. We never confirmed a downtrend, even though the absolute low on January 2nd is lower than the low on December 20th. It was a tail. We never closed there, so you need to have a close to confirm that you're going into, in this case, a downtrend. So we'll see, does this become an upside pivot that leads to a break of that 510 area that confirms a downtrend? Or does today's high get broken at some point this week that starts making this market look a good bit more bullish, and then you have a lot more bulk confirmation if you can get above the December 26th and December 18th highs. IWM, guess what? It continues to be more problematic. There's no surprise there, especially when you look at the TLT. The TLT is down today. It's not like a breakdown candle necessarily because we kind of closed right at this $87 TLT support. But this TLT chart is scary looking if we continue to hold below $87. We are in a tightening cycle right now. I think I posted into the VTF at one point pre-market this morning that chart that shows just, and I forget who does it, but it shows just like the general tightening and loosening of the economy, the macro tightening or loosening that we're in based on how bonds have been moving. It's not entirely based on what the Fed is doing because the Fed has still been cutting, but as we know, throughout this entire cutting cycle from the Fed, interest rates have actually been going up, right? Because at the end of the day, interest rates are on market. So not surprising at all to see TLT looking very precarious and being down, leading to IWM weakness compared to the Qs. That's been very consistent. In the morning meeting this morning, we were talking about this 226 level for the IWM. That, you know, similar to SPYs and Qs, really big gap up this morning. Let's see how the IWM handles the gap. The bull situation was that 226 gets held as support because you have this bear consolidation here for the Russell. The absolute high of that bear consolidation is from December 26th. It's just over 226. So today, if we're able to hold 226 and then ideally for bulls close above this 21 EMA at 226.63, this picture actually starts to look a good bit more bullish. But guess what? That clearly they failed on. We have just another upside tail here that maybe shook out some shorts that were short on this bearish pattern, but it's into a declining 21 EMA. Let's see if this becomes the pivot high that leads to new lows. This market is telling us still, when you look at the SPYs, Qs, and especially the IWM combined, that most immediately you are better off shorting than buying this market until we see these technicals change. The technicals would change, I think, if any of these indexes over the course of the next several days break today's high. Then we have to kind of reassess any sort of bearish thought process. But for the moment, this market still can't quite seem to get out of its own way. So that's kind of the index updates, I think, with where we're at. I think it's a decent big picture analysis. Continuing to be blown away by the overall strength on some of these quantum computing stocks that they can't seem to fully break. At a certain point today, it seemed like we had it. This RGTI was really strong off the open, nothing new. When it was starting to clear through 20, where we saw that there was a very clear seller above 20 on Friday, we're starting to clear through 20 and get above that. I was looking at this chart and I'm like, well, we're still super extended, but we know that momentum can make more extension out of extension that already exists. And the seller that was there on Friday above 20 wasn't, and this thing was looking like it was going. I did have one pretty good trade today where I sized up in RGTI in a pretty big way near highs and was able to kind of capture a lot of this fade. When this thing cleared back below 20, I remember discussing actually on this 1045 candle, I was like, we're probably due for a little bit of a bounce. If we get a bounce and that bounce stays below 20 and then we break this low, the 1045 low, I think that this RGTI is shot. I think that was probably a direct quote. I got exactly what I was looking for. We got this breakdown back through this key 20 level. Then we extended down a little bit. You know, we traded straight down from 2140 to 1930. It's a big move, even for this stock that's been moving crazy. Got the bounce off of that, the retest of this $20 area, then on the 1055 candle breaking new low. And I was like, finally, I got it. Finally, I got it. It's RGTI that has made $8 million in revenue in the first 3 quarters of 2024, but is trading at like a $5.6 billion valuation that, in my opinion, does not belong anywhere near $20. And I've been battling this thing, I think, as people know, to the short side on size. I'm like, finally, I got it. And then the follow through never really actually happened. You know, once again, the underlying bid on this thing, it wasn't exactly strong at that point, but the follow through on selling never really occurred. And obviously it was a decently strong day for the market, but after this failure here, I really wanted to see some follow through 1850, a break of lows. At a minimum, I wanted to see a close below $19 today so that I could have a big, nasty upside tail push through, close below 19, and did not get that at all. These quantum names, it's baffling to me. They continue to just really, really hold in. I'm sticking with my short. I'm sticking with my thesis. I'm risking a lot on this stuff. I'm up a lot on this stuff, broadly speaking, overall, when you look at the quantum names as a whole, though I am negative in RGTI at this point. When you look at all of them as a whole, I'm still very nicely positive. So I still feel like I am playing with the house's money, even though I'm negative in this one specifically. I'm sticking with the trade. I'm still looking for this thing to top out, but there's got to be a day where we actually get some downside follow through. It'd be fantastic to see some large order option flow on the bear side, similar to what we saw on that SOUN on Friday, which I think contributed to the weakness in SOUN today. So SOUN did try to also catch a strong opening bid, like a lot of these other AI quantum names, or almost some of them trading together, even though quantum and AI are separate but similar but different. This thing ended up being real weak, closing negative. It's a nasty secondary tail. This thing looks like it's ready to work its way down towards new recent lows to me. Test this 21 EMA, probably break this 21 EMA. I just have a target. I'm not going to adjust my game plan on it, though I'm tempted. I just have a target of a bit below $18 in this thing. But I think after this tail with some of that bear flow we've seen, I would expect to see this thing trade back to even as deep as $15. 15 to 17 for sure seems very, very reasonable to me. So that one was a little bit better. What else? QBTS was really strong today. Don't have anything else to say about it. It was pretty strong. QUBT, which I'm not in, was looking when it was getting above $20, like it wanted to break this wedge pattern to the upside. That failed. Palantir, notable price action in Palantir today. It got initiated, I think, from Morgan Stanley. Someone has to remind me. I think it was a Morgan Stanley initiation at underweight with a $60 price target. The stock was pretty weak early on in the day on that opening sell-off when a lot of other AI quantum-related stuff was ripping off the open. They sold this thing all the way down. And then, lo and behold, a little bit of a bounce back. I think I said down at lows. I was like, all right, we're really extended down. This thing will probably bounce back a little bit. And it bounced back a little bit, and that bounce back turned into a lot of bit. And next thing I know, it's retesting 80 and breaking yesterday's high. And I'm like, holy crap, that's unbelievable. And then this was actually my other really, despite everything, there was all the headaches I had with my positions today, I had a second pretty good short. These were the only two trades I took. I shorted Palantir on size on the way down off that 80, and I had shorted that RGT off size into this like 21 quarter-ish area. Those are the only trades I really did today outside of just trying to have position management. And then lo and behold, the thing rolled all the way back down and broke new lows. There's big support. I know it tailed below it on January 2nd. But there's big support, I still think, in the $75 area for Palantir. And we didn't close below that. But this is not a good-looking candle. Palantir had a really strong day on Friday, which I remember talking to Rex in the VTF on, I think, the afternoon meeting, maybe on January 2nd, when he was saying, hey, don't you think maybe Palantir had a little bit of relative strength in the afternoon? Saying, yeah, it did. The stock just pulled back from $85 to $72.50. It would make sense for this thing, even if it's going to fail and to continue lower, to either consolidate here a little bit or bounce back and then create a lower high before breaking through that $72.50. I was shocked by two things, though. Even as I was expecting a bounce back from Palantir, the degree of the bounce on Friday, the degree of the strength on Friday was really impressive. This was like the strongest stock that was out there on Friday. Super strong off the open, beautiful uptrend throughout the entirety of the day, closing right at 80, closing perfectly at highs. So that surprised me. And then given that strength on Friday, to then see this close as weak as it did today, especially when it retested 80 at one point midday, is also honestly a little bit surprising. But the stock is nuts, and broadly speaking, I would say that this is not what you want to see if you're trying to be a Palantir bull. Not perfect for the bears either, though. Perfect for the bears would have been a close below Friday's low and really a close below 75 to try to break through this big support zone that I keep talking about around 75. So not quite perfect for bears, but definitely not what you want to see if you're a bull either. Curious to see if off this, like, now this becomes a potential lower high, by the way, via like a king-queen type pattern where you have a strong positive Maribozu that is then ruined by like a it's not quite a negative Maribozu, but just about that way. So like if you were to, the whole idea behind like a king queen pattern is basically when you have like a really big green bar followed by and fully negated by a really big red bar, or the opposite. So think about it. If you were to like somehow combine these two candles into one candle, then you have something that I think everybody is much more familiar with, which is just a big upside tail. So if you could somehow combine these, that's what that king queen pattern kind of does, into one candle, then you have basically like a big upside tail that looks like a lower high potential continuation down doji on the daily chart for Palantir. So that, again, that's just some more, I guess, background on what that pattern looks like. So we'll see now if Palantir, and also if the market, because the market always needs to help a little bit, especially now that Palantir is both in the S&P and the NASDAQ, if the market stays weak off this upside tail that we had today, and Palantir gives some downside continuation off of today's weakness to really lose 75 on like 74 to 75 on a closing basis, all of a sudden this thing looks pretty problematic to me technically for bulls. Trying to think if I have anything else to talk about. I don't really have anything else to talk about, but trying to make the most out of what was a frustrating day for me, so that hopefully you guys can maybe learn a couple things that can increase your own success in trading. So that's all I got. Managed to ramble on for a little bit. Happy to answer any questions anybody might have. Orioles confirming that it was a Morgan Stanley initiation of Palantir with $6 price target. Thank you. Michael J letting me know that Sanjit Singh slapped an underweight rating on the stock while acknowledging strong execution and momentum. We see success more than priced in at the current multiple premium. Yeah, that's my thought process too. Rex here with a question on Palantir today. I shorted Palantir this morning off the open and covered my risk a little bit at 77. Okay. I got the note from Morgan, and it was relatively weak. Yep. I reshorted some at 10.15. Yeah, I know that's when Tate was looking at the short as well. Tate called it out into 79, and I liked it. I thought that could be an area. It overshot really where you want to see it bounce to. Ideally, on the bear side, you would want to see the 950 be a pivot high into the 80 MA that then breaks down further. But sometimes you need more of a 15-minute style correction. It's a high beta name. So as it got into this $79 area, especially after it gave these like two upside little tails in a row, I liked Tate's call out on the short, but I don't know. This market's so crazy. Then it just broke that high. So if you joined him on the trade, I know I said at the time I liked it. It just didn't work. So you reshorted some at 10.15 when the Qs were also peeling down, and Palantir corrected down to the 21 EMA on the 5.15. But the market was so strong, and Palantir broke the opening high and traded to 80. But somehow Palantir just failed. Yeah, it was crazy. That's what I was just talking about. It was very tricky, 100%, very tricky. I am very surprised that this thing was able to bounce back to 80. Given that it was able to bounce back to 80, I am extremely surprised that it made a new low on the day and was able to be as weak as it was. It's just, these stocks are just really crazy right now, generally speaking. I have found, maybe not so much with Palantir, but I've definitely found with some of those quantum names where a lot of the way that I think about trading in the moment when I'm doing my technical analysis is I think about where stocks should and shouldn't be able to trade to if my idea is correct. Like broadly speaking, like if you go back to the RGTI thing, like this is a perfect example of it where it worked. I'm seeing this break down. I'm like, okay, this is really good. I know that the stock has been really strong on the daily chart, but this is good for me as a short. But what am I thinking at this low? I'm thinking, all right, big pullback, stock should bounce a little bit, but I really don't want to see this thing get too much above 20. And if it does, if it trades back to 2050 plus, if it trades back to 2070 plus, I know for sure that now that short that was looking good for a moment is looking wrong. So I'm thinking about that, and I'm saying to myself, in the ideal situation here, is RGTI never gets back up above 20 because it was a previous level. It came back below it. Those moving averages are quickly catching up to 20. That's how I think about trading. But what I've noticed with these really high beta names, especially the ones that get pushed around a lot by large institutional order flow, which Palantir certainly fits that category, is it will overshoot on both directions sometimes where I'm comfortable with, and then still actually be correct and still work, which is not what happened with RGTI today. It was at least in this moment, it did exactly what I wanted it to do. Bounced back from its extension like it should, held 20 like it should, never gave me an inkling for a second that my short was wrong in that moment, and then gave me continuation. Palantir, though, is the opposite. That's what I was just talking about when I was reviewing Palantir. This thing I, blew my mind when it was up here at this 80 that it was able to do that. It was able to break its opening high after that opening weakness with the initiation that was creating that weakness coming from Morgan Stanley. And by the way, initiations don't matter as much as upgrades and downgrades, but that was a pretty big one. An underweight initiation, $60 price target. Overshot my expectations on both sides. So I guess the bottom line is when you're trading these really high beta names that are seemingly constantly in play, that have a lot of large order option flow that's pushing them around, I think sometimes you got to give a little more wiggle room in terms of your thought process on where things should hold than you would otherwise. With that said, even with giving it a little bit more wiggle room, I would never expect that this thing would be able to get back up to $80 and that my short thought process would still be right on Palantir by the end of the day. So just really tricky. From Austin, if a brokerage causes you to blow up your account, like if it were to go down, that's just a general question, are you just out of your money with no recourse? Generally speaking, yes. Any brokerage worth its salt will have a way for you to be able to liquidate your positions. I could have at any time had the trade support team fully liquidate my positions. I was never at, talking about myself today with my issue, I was never at any major danger at all outside of frustration of not being able to properly manage the positions that I'm in. I could have chosen, if I wanted to just call up the trade support team and say, hey, I need all my positions liquidated. I can't have any risk on when I don't know, fully what my position sizing is and if orders got filled and stuff like that. And they could have taken it for me, done that for me immediately. If I can, the trade support team did a phenomenal job today. They really did. They were under pressure from a bunch of people, including myself. It seems like the people who are having the most amount of issues today were the people who are some of the bigger traders at the company, who trade the most and have the most amount of positions on. So I think it was really hectic for our trade support team. But we got a team of all-stars that are doing their best to support us at T3, and I think that they did as great of a job as they possibly could have been. These people were going through, because they couldn't get any information from Lightspeed, they were going through different backend files and stuff to actually count out and keep in mind, for me, I'm just eyeballing it. I probably had let's see if I can even figure this out. So that would be 110 70. I don't know. I can't really figure it out. But I probably had like 1,000 executions, or more than 1,000 executions today. And at one point, I had the trade support team going through and counting every single execution I had the entirety of the day to confirm for me what my actual position sizing is on a couple of my positions that I was a little bit unsure of because of the issue that occurred today. So just a phenomenal support team that was bending over backwards and killing themselves. One of them was doing it from took the day off today to have like a minor, I don't know what the issue was, like a very minor, non-life threatening, maybe surgery or something. I'm really not 100% sure what the specific issue was, and was from the waiting room of the like emergency room reviewing my positions for me. I mean that's just awesome. So T3 rocks. But you know it circles back to what I say all the time. It doesn't matter who the brokerage is. You always want to be able to have multiple ways of getting into and out of a position at any time. Sometimes you see exchanges go down. It doesn't happen much anymore, but when I was a new trader, you would see exchanges declare self-help on each other all the time. All the time, one of the ECNs would drop. And if you only have your route set to go to NASDAQ, and NASDAQ is down, and then all of a sudden you're like, oh my God, I don't know how to liquidate my position, that's on you. You know, if you're on a smart order route that can go to multiple venues, that's probably fine. But you should have multiple ways to be able to buy and sell at any time. And for us at T3, we have a great trade support team that we can communicate with. You shoot them an email, trade desk at T3 Trading or trade desk at T3 Global, depending on which company you're at. Hey, I need XYZ position liquidated. They get that stuff done for you so fast. So we have multiple ways of always being able to get traders into and out of positions. But at the end of the day, unfortunately, any money that I am losing today by this situation is going to be on me. And it sucks. And it's definitely a number that is in the thousands for me. And I was thinking about it. I don't even know how I can try to calculate how much money it cost me. I don't think I'd be able to figure it out. But it's probably somewhere between $1,500 on a very low end to $12,000 on a high end is what this cost me today. And being able to go in and exactly figure it out, I'm never going to be able to do that. It just is what it is. I just got to come in fresh tomorrow and focus on doing the right things about my trading and not pulling my hair out over an occurrence that happened one time in 15 years. But appreciate the question, Austin. It's definitely something worth reviewing. Over on the YouTube, Ryan says it's time for me to switch to DAS Trader. That will never happen for me, at least. I got nothing wrong with DAS. I think DAS is great, but it will never switch. From Tate, when does the stock market realize that the bond market is on fire? It's a great question. I've really started to wonder that myself. This TLT situation is becoming a big concern. We know that the mega caps, the Mag 7, don't really care about interest rates too much. But at a certain point, it could bleed through to them also. It could. So we'll see. You know, one of the things I've always been phenomenally struck by over the course of my trading career, I've seen it happen so many times by this point, is how the market will not care about something that's right in front of us that we're talking about, like the interest rate situation right now. And then all of a sudden one day it does. How many times has it happened, even just over the course of the last several years, where whatever that thing is that we're noticing, in this case it's interest rates. Wow, interest rates look like they're becoming a problem. Qs are at highs. Right? And then all of a sudden, out of nowhere, it doesn't seem like even anything special even happened that on that particular day, the market decides it wakes up and it cares. And then we've been talking about it here for our team for 2 weeks, but the market didn't care. And then all of a sudden, that's what CNBC is talking about every 5 minutes. Oh, interest rates are destroying the stock market. I'm not going to say that's going to happen. I have no idea. TLT could start bouncing back tomorrow, and then this could become a nothing again, just in the same way that in this bounce back at the end of November when we were putting Scott Bessent in charge of as Treasury Secretary, took away my fears of this leading to a real market problem. We could begin a bounce again tomorrow, but we also could be in a situation a week from now where the market's getting destroyed and CNBC is talking about interest rates for the first time. So we'll see. The one thing I would say on that is, on the one hand, like I just said, I've been shocked about how many times over the course of my career we have noticed something that should matter, and the market doesn't care, and the market doesn't care, and then all of a sudden, somewhat randomly, it seems the market cares. Sometimes it's not as random as you might think. Sometimes what we end up seeing is like the actual market break or whatever happens. You have this interest rate thing. I'm just going to use this as an example. I don't know if this is going to be the case or not. But you have this interest rate thing becoming a real problem for the market, and you're noticing it, and you're noticing it, and you're noticing it, but the market doesn't care. And then seemingly all of a sudden it starts to care, but that corresponds with just around an options expiration. Yeah, exactly, Tate. It corresponds with just around or just after an OPEX when a lot of long gamma drops off, or it happens to correspond with right after the 2 weeks of the beginning of January where a lot of forced money flow comes into the equity market, dries out, which also will approximately correspond with January OPEX, and then all of a sudden CNBC is talking about interest rates every day. So what I've noticed originally seemed like, wow, I was talking about that for 2 weeks and all of a sudden the market started to randomly care. Now, as I think I've become a little bit of a better, more knowledgeable trader over the course of the last couple of years, I recognize that it's not that the market doesn't care, it's that the market wasn't allowed to care because of certain market dynamics. And then when all of a sudden those market dynamics release or unquench or whatever, then the market actually can care. Thanks, Tate. Apex Joy wants to know when is a good time to get out of NVIDIA long positions. Hard question to answer. Into today's extension, into big 150 resistance, probably would not have been a bad idea if you were swinging NVIDIA long to take a little bit off. Probably would not have been a bad idea to take a little bit off. I think that a lot of NVIDIA continuation on whether or not it really breaks out to this 150 depends on what the market does from here. If the market breaks today's high, NVIDIA is probably going a lot higher. Might need a little bit of time to satisfy the extension, but if the market's able to break today's high, NVIDIA is probably leading the way and continues a lot higher. If the market doesn't, then you might be looking back, if this becomes a pivot high in the SPYs and Qs like I was talking about earlier that leads to lower price action, you might look back at NVIDIA at 150 today and say, wow, I wish I had sold more. So it's a little bit tricky to say. I think it's pretty market dependent, but I am still leaning on the bear side of the market. So for me, seeing extension on NVIDIA into resistance, even though it's the strongest stock that's out there, I probably would have been a little more risk averse today and probably would have looked to have taken off a little bit more of a long position than I would have otherwise. From Cyril, given IWM relative weakness, is it a better potential short than the Qs, or there could be some rotation? Broadly speaking, yes, it's a better short than the Qs. Can there be rotation? Yes. There could also be rotation, and we could get a day where the Qs are much weaker. So little tricky to say, but very generally speaking, I would say you're better off being short what's relatively weak. You're better off being short what has a more bearish technical pattern. Not impossible when you put that on that you see rotation where the Qs become weaker than the IWM, but if I had to pick one to be short, IWM is probably the better one to be short. No problem. All right, folks, a little bit after 5 o'clock today. I'm going to wrap it up. Have a great night. I will see everyone tomorrow, and hopefully everything will be working like normal.